The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 13th magnificent, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. The first one brought to us by Ralph Waldo Emerson. He once said, all successful men have agreed in one thing. They were causationists. They believed that things went not by luck, but by law, that there was not a weak or cracked link in the chain that joins the first and the last of things. Our second empowering belief, I love that one. Our second one, I like this just as much. Brian Adams, in How to Succeed, he wrote, the energy that makes organizations move depends upon individual enthusiasm. Leaders with bright ideas and the ability to inspire high thought and actions, and others are the main generators of energy. Their individual brand of enthusiasm rubs off on other people and inspires them to greater works. That is a beautiful thing. Let's go see if these markets are inspiring us and what they're rubbing off. What is it that they're saying right now? We've got the Dow off 40 points right now, trading at 15,078. S&P down about 4, trading at 1629. Composite off 2 points, trading at 34.34. It's a composite. It's the NQ that we've got to be paying attention to. It'll give us our signal. The Russell 2000 off about 2 points, trading at 972. Google flat out here, down 38 cents. Apple up 250. Microsoft up 6. Intel down 19. Cisco up a penny. Leading the charge to the downside, you've got CNOOC. CEO is the ticker symbol. They're off $3.43. CF Industries, CF is the ticker symbol. They're off 3 1/4, off about 2%. Joseph A. Banks. Not that it's a bank, but it's a clothier out here. JOSB is the ticker symbol. They're off 7%, down 3 points. Priceline off a couple of points. Mosaic, MOS is a ticker symbol. They're off 3% this morning. Joy Global used to be JOYG. Now it's just JOY. I like that. That was a good change for sure. However, this morning it's off $1.46, off 2.5%. Yum Brands out there, YUM, yummy in your tummy, except for this morning. Needs a little Pepto-Bismol. It's off it's off $1.56. That's off 2.22%. IBM looks like it is down this morning off $1.32. You've got Advanced Auto Parts, AAP, off $1.40 as well. To the upside here, leading the charge, the upside. It's Netflix out there. Once thought for dead, not any longer, that's for sure. It's up 4.5 points. That's up about $10. Tesla Motors on its way to its new celestial planet out here. That is higher highs. It's up $6.50. That's up another 9% this morning. Biogen, BIIB, that's up about $5, up 2.5%. Theravance having another strong morning, up 14% this morning, up $5. You've got Regeneron Pharmaceuticals up a percent here. That's up $3 and change. First Solar up 5%. That's up $2.50. Toyota Motor having a nice day, up $2.80. Apple, as we mentioned, up $2.16. X1, one of the other 3D system entities. We in the last hour we took a look at Gartley buy and Gartley sell patterns. Taking a look at Stratasys, that was selling down this morning. That has got a Gartley sell pattern. We'll go take a look at X1. It is up about 5% here this morning. Our call number as always, is 877-927-6648. And you know I would love to hear from you. Just give us a call. We can take a look at your stock chart. I'll start off, just take a look at the NASDAQ futures. Mentioned this during the opening of the previous hour on the opening bell call here. I think it's the NASDAQ that is going to be key to whether or not there's going to be a reversal or at least another thrust higher in the market. If I pull this back, you're taking a look at a long-term rising price channel. They're all in it. All the 30-minute futures charts are. In this case here, the NASDAQ futures, which is the first one to test the lows of that rising price channel, broke out through it. That could have been a real breakout. Instead, what happened that when you break through a rising price channel or a descending price channel, any price channel, even a consolidation, the only difference is some are diagonal and some are horizontal out here. When you break through them, what you're typically going to do, and not you, but what the equity, what the commodity, what the currency, whatever it is that you're trading is going to do, it's going to go test it and see if it really is a break. Looks like at this stage, the NASDAQ futures are saying it was a false break to the downside, as price has now gotten back inside that rising price channel. We can see moving in on the 30-minute chart here on the EKG of the NQ, moving towards that overbought territory, but does look like this rising price channel wants to hold for a bit longer. Let's go take a look at the daily indexes out here, as we do each and every morning during the Money Masters show. Let's go start off by taking a look. First, I got to click on the right button. Now, if you are listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, this show will stream live to your devices. If you go to the homepage of tfnn.com, on the right-hand side, you will see a little button that with three little smartphone devices or tablet devices. Click on that. The show will stream live, and, of course, you can always get the replay on Channel 10. But if you want HD, which I would want if I were you, that way you can see all these numbers in great detail, just go to the homepage of tfnn.com. Click on the link that takes you to the Tiger's Den. You can test drive that for 30 days for free. What a great group of human beings inside the Tiger's Den. You know, folks, it really is all about peer groups. When you want to up your game, it's as simple as joining a peer group. Think about it like this. If you were playing tennis or you were playing golf or you were playing any sport out there, if you wanted to up your game, would you play against somebody at a higher level or someone at a lower level? Yep, you got it. You would always play against somebody at a higher level because you'll pick your game up. You might not pick theirs up, but you will pick your game up, and that's what the Tiger's Den here at TFNN offers to you. So go check that out, and as long as you're at the homepage of TFNN.com, don't forget about our special Tiger Dollar promotion that we've got going on. That only happens a couple times a year, so no time to procrastinate. Now is the time out here. If we start off taking a look at the indexes, let's start off with the New York Stock Exchange. Often overlooked, but perhaps one of the more important indexes out here. Why? Because it gives us our larger breadth data. What do we have going on here? Well, at the price point of 94.88, or right around that level, we've got Fibonacci numbers coming together. It's a beautiful thing. We've got a 2.618 expansion. That would be off of the swing point high from February 19th. That was $9,004.41 all the way down to the low that was put in on February 26th. That level, 8,700. We'll just call it 8,700 even, Steven. If you took those two numbers, you subtracted them, you multiplied it times 2.618 and added it to the low of February 26th, that would take you right up to about 94.89. That also happens to be a 1.618 expansion of a set of swing points. That swing point, those swing points being April 11th's high, 92.56, all the way down to the swing point low that came in on April 18th out at 88.90. A 1.618 expansion of that. Again, the same thing. Subtract from 92.56, the level of 89.27. Multiply that difference times 1.618, add it to the bottom. That'll take you up to about 94.90 out there. That sets up a butterfly pattern. That should be a strong area of resistance. So on the New York Stock Exchange, on the wider breadth of the market, it either has or is completing a reversal pattern out here. We did see a reversal candle. The only candle session here was on May the 9th. We saw a little bear sash candle. That was really erased in my book when we take a look at Friday's action out here. And so right now, no bearish candle out here inside the New York Stock Exchange. That says it most certainly can move higher up into about that 94.90 range. That is on the NYSE. That is the daily chart. Let's go peek in on our next chart. How about the NDX 100? 100 out here. The NDX 100, that's got a butterfly sell pattern. So we're starting to see all kinds of patterns coming together. So we're looking at the NDX 100 right now, traveling out at 29.82 at 29.8430, which we've already hit here intra-session. We got up to 29.84, even Steven here. That was completing the 1.272 butterfly. That was a expansion of swing points from the September 21st level, 28.78's high, all the way down to the low put in on November 16th out at 24.94. It has made the 1.272 butterfly pattern. Now all that you're waiting for is what? Is a reversal signal. Do we have one? Absolutely, positively not. It is not out here. At least it is not out here just yet. Even worse, if you will, is the gap up that we saw. Gap up from May the 3rd out there. Don't be afraid of that gap. That gap is actually your friend if you're a bull out there. And even if you're bear, it's a great place to be able to grab information. If, in fact, and it's untested, it's that May 3rd low. On any reversal, your first area of support is going to be that May 3rd low. That's 29.37. Your next area of support is going to be the high of the prior session where it gapped up from on May 2nd, 29.16. You close below 29.16, folks, and the NDX will pull all the way back into its real area of support, and that happens to be the move up off of March the 4th. That is one of the areas of support. It has been tested out here, and that's where it would head back to, but not until the bears show up, and the bears are just simply not around in the marketplace, not as we speak, at least not inside the NDX 100. Let's go take a look at what's the next chart we should look at here. How about the composite, as long as we're inside the inside this industry segment out here. If we take a look at the composite, it too has a butterfly pattern. It is the 1.618 butterfly sell. That really completing at about 34.29. Right now you're trading at 34.37. This pattern here not being breached. We can also see it is in the overbought territory. Last time it was up in overbought territory was when it was making its swing point high on September 21st, 2012. Something to think about. Let's go take a look at the no bears in sign here in the composite. Let's go check out the S&P 500 as soon as we can find it on Stevie's stock chart here. As we take a look at the S&P 500, what is it doing right now? Traveling out at 1630. If we go taking a look for bears, if we go hunting for bears, do we see any? Well, what we actually see out here is actually on Friday, that candle was really what's referred to as a bull sash. A bull sash, bear sash, well, they don't really take into consideration the trend out here. So no real bears in sight inside the S&P 500. What does that set up? Well, that sets up that it absolutely can go move up to the top of the next primary trading range boundary line. That would also be the top of the rising price channel. That would take you into about the 1650 level. That's trading at 1631 right now. So no bear sightings. We saw a few of them coming out earlier this morning, but that looks like that was nothing more than a head fake. That is in the S&P 500. It has more room to go before it moves into its overbought condition. If we go take a look at, we got to take a look at the Dow. Maybe we'll take a look at the SOX as well, and anything else that you'd like. Just give us a call at 877-927-6648. We'll be right back, folks.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is off 35 points right now. S&P is off 2. Composite really is kind of flat off 80 cents here. And let's keep looking at the indexes out here. Let's go ahead and complete it. We didn't look at the Dow, didn't look at the Russell, didn't look at the SOX, didn't look at the trannies. So let's go ahead and actually do that and finish it. We're looking at the daily charts here. We've got the daily chart of the Dow on my screen right now. It's trading at 15,080 as we speak here today. A bear sash candle, but we're early in the trading session, only an hour into it. You've got the A to B, 1-to-1 A to B equals CD up that it has completed. Looks more like, and that was at 15,097 here at 15,079. Looks to me like more like 15,206 is really the target here for the Dow. Looks like it wants to go ahead and complete that 1-to-1.272 A to B equals CD. And if it can get to 15.2, it can get to 15.5 out here. But one thing at a time. Right now, we're just waiting for the. Let me put this out here on my chart as well. We're just simply waiting for the. We're waiting for the bears to show up. They're not out here. They are going to show up, folks. They absolutely are. In the case of the Dow, when they do show up for work, they're just still enjoying their little, what we'll call their late winter, early spring vacation out here. And when the Bears do show up for work, they're going to take the Dow down to a price level of about 13,007. That'll be the minimum price target, and that'll take you all the way back into the February lows, February 25th out there, out at about the 13,780 range. But right now, the Bears really not showing up much for work. Let's go take a look at the other indexes. Let's look at the Russell 2000. Let's go see what that is doing here. Russell 2000 right now trading up at, give me a moment here. The Russell is trading at 971.79. Got so many lines on this stock chart here, it could be confusing to just about anyone. So let's go ahead and clean this up here because you could be looking at it, and that's about all that I'm going to clean up. I'll go ahead and move away from this A to B equals CD. Right now we can see the Russell 2000. It's really up against its primary trading range boundary, but it does have an A to B equals CD up. It's a confirmed one as well. We know we had that big down thrust here on May Day, on May the 1st here, but the actual swing point is the April 30th level. If we take a look at your A to B equals CD, your 1-to-1 A to B equals CD, well, that was at the 979 level. Then we're back to that red line. Your 1-to-1.272 takes you up to about 986 out here. Looks like that is where the Russell 2000 wants to head to. Now, when the sky does start falling, well, the Russell 2000 will be one of those leaders in the pack here as far as falling. Now, the Russell 2000 is also over any kind of resistance areas. Those last time we saw any real bears were back here at the highs in the March area. We see bear sashes, evening stars, shooting stars. We get the whole gamut here. But, of course, the B point was taken out with volume of an A to B equals CD up, only a 0.382 retracement. It really does say that 986 is more likely the target area. It's traded at 972 right now. That was on the Russell 2000. If we go take a look at the stocks out here, this is the weekly chart, but let's put the daily chart on my screen. On the weekly chart here, what we can't see is the stocks here is up over its resistance level. It's trading into its swing point high from February 18th, 2011. That high is 474.33. You're trading at 464.19. That's where it wants to run to. You can also see the rising price channel going all the way back into 2009 out here. Now let's put this on a daily chart out here. Let's go see with inside the stocks if on a daily chart we've got any kind of bears. Oh, I need to kind of widen that up for you. And what we can't see here inside the stocks, it's actually now more bullish than it was before from the standpoint that it has moved back into the rising price channel. This was a rising price channel coming off of November 16th. It broke through that. It broke through that area with conviction. Of course, there never was a test coming back into it. There was never a test until last week on Thursday, on May 9th. You tested it on Friday. Not only did you test it, you got back inside that rising price channel. So this pattern here on the daily really is confirming what it was that we took a look at inside the weekly chart. If we take a look at expansions of swing points, we would come and take a look on the daily chart. The high of March 14th down to the low of April the 19th. You will see that you're just slightly above the 1.618 expansion, which would be 463 out there in the marketplace. So again, it looks like about 476. I think that is right around. Well, let's just go. Let's not assume anything. Let's go back and look at that weekly chart. The weekly chart says 474.33. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Looking back, folks, Dow off 26 points right now. S&P off about 1.5, and the composite off just over a point. I mentioned X1, one of the other 3D system technology companies out there. XONE is the ticker symbol. As we take a look at it, it has gapped up here this morning. It has a confirmed A to B equals CD to the upside. The B point on this, well, the A point is going to be your IPO date on February 7th, the low there of 23.50. That was your A point. Your B point was the high on April the 12th, out at 37.57. We take a look at retracements here. The retracement of the B to C leg of the A to B leg was a 0.382 retracement, just slightly below that. Right now, the B point here again was April the 12th, 399,000 shares traded that day. Taken out was 687. That is confirmed. A to B equals C to up. Now, if we take a look at that C to D leg, much stronger than the A to B leg, and we compare that retracement level, that says 48.72 is the next stop for X1. XONE is the ticker symbol. It is trading at 44.78 and gapped up today into its 1-to-1 A to B equals C D point, the D point. If we take a look at some of these other stocks here on the move this morning, we would go take a look at, let's do it. Let's take a look at Tesla, TESLA. Let's go see what is doing this, what kind of volume is behind this move out here. Tesla here. Gapping up 2 trading sessions ago. That was on May the 9th, doing it with 28 million shares. Coming back and following it up on Friday with 25 million shares, so not too bad out there. This morning, in an hour, just over an hour of trading, it has done another 8 million shares out here. So volume inside Tesla is pretty good. In the extreme overbought territory. So that says that these levels here should be worked off, whether that is worked off by trading sideways or pulling back. The pullback on this would most certainly be right around the breakout level of May 9th, the low of the gap of 63.69 out here. So do not chase this. Absolutely do not chase this. This still has it had a high short interest rate out here. In fact, when it had broken out on May 9th, it was somewhere around the 26 to 28% short interest. So there was some short covering going on. Most certainly, I imagine there was some as well on Friday. So Tesla taken off to a new solar system. However, it has gotten into overbought territory, and that means it is going to run out of gas here. TSLA is the ticker symbol. AutoZone here has moved into the lead to the downside. As I recall, AutoZone had a pretty big day recently. Let's go take a look at it. AZO is the ticker symbol, but it is gapping down this morning. Give me a minute here. Let me just clean up a couple of things on this stock chart. In fact, I'm just going to delete it all. How about that? We're just going to start from scratch. Sometimes that's the easier thing to do. So we're going to go take a look at AutoZone. Let me go ahead and see where she's at. So AutoZone had made its way up to a higher high on Monday, doing it on a little bit less relative strength out there as it had made a high here on May the 7th. Not Monday, but on Friday, I should say, 313,000 shares as it got up to $423.46. No island or anything, but the candle formation here that we're looking at on AZO is a bit bearish here. So we've got so we got a gap down, so that sets that up. Now, where is this going to move down to? Well, it certainly would move down and test the next, the most recent area of support, which should be the gap up from April 25th. That low is 390 out there, 421,000 shares. As it had moved higher already today, 110,000 shares. So it's coming into that area. Now it's not all the way down there, but it's coming down with some volume inside this equity. That is AutoZone. What do you want to see this thing do? You want to see it come down and test the level of 390. That would be April 25th. You want to see it do it on less than 421,000 shares. If it's coming in there hot, that says that AutoZone will come all the way back down into its most recent swing points in that April 19th area, right around 375. And at 375-ish, what you've got is a breakout from February 7th. Let's draw those lines across the chart here because it's really not a bad-looking stock chart. These are areas here that have held as support, so it's what you would be looking for. So let's draw those back here on the chart. Now, the first one that I'm drawing here off of the gap from April 25th, untested. You don't know if that area is going to hold or not. You'll find out soon enough. And if that area fails, comes down to these swing points, well, your real buy on AutoZone might be as it comes back to this original breakout session here from February 6th that broke out with about 1.1 million shares. All bets are off if you start moving down with more than 1 million shares at any point in time during this pullback out here. You start coming back to that area with more volume, that sets up a move all the way back down, well, into potentially the lows here of September in 2012 out in the 350-ish range. But you got to assess this one moment at a time, and that is on AutoZone. let's see, we took a look at Joseph A. Banks earlier. Let's go peek in again and take a look at the volume, see what kind of volume we've got. JOSB is the ticker symbol, and looks like they're also having a sale today. Unfortunately, it's not just on their clothing. It is now on their stock. You've got volume of 694,000 shares. It is going to go visit the high volume low from January 28th out there. 37.31 is where she is headed to. That was on Joseph A. Banks. Let's take a look at Theravance. Haven't looked at Theravance here for a while. That thing, I believe, is also another rocket ship. Must be traveling out here with the folks from Tesla. I forgot the name of their space company out there, but THRX is the ticker symbol. I know what the ticker symbol is for Theravance, and let's go take a look at it. Oh, gapping up this morning with volume. Let's count the gaps out here, see if if we're getting close to exhaustion time here. 1, 2, it's the third gap. So looks to me like we now have an exhaustion gap here inside Theravance. Just by visually looking at it, it is the larger of the three gaps. And what I'm referring to, folks, this thing first gaps up with nice conviction on April the 15th, 4.7 million shares. If you take a look at that first gap, that is a price point of, you would use, somebody else can do it, 2384. See if I can somewhat do it. 2384 from 2526. Now I'm not even. Well, let's see. I guess I can do it here. Let's actually. Let me write down the numbers. Sorry about that. If I sound a little exhausted, it was Go Wings last night. They were playing Game 7. For any of you that did stay up to watch that, then you were up with me. And then I had a hard time because I was able to get my second, third, fourth wind, whichever wind it was. Once I get those winds, it becomes then hard to fall back asleep. And so running on a little bit of fumes here this morning, but it was a great game. Good to see my Detroit Red Wings make it into the next round here. So the $1.42, we're going to go ahead and mark this on my screen here. We got $1.42. Let me get rid of this here. $1.42 was our first move inside Theravance. Let's go take a look at the second gap here. So the second gap that we're taking a look at is really going to be the high of April 15th, which was 29.71, to the low that came in on April the 18th, and that was at 31.05. Let me see what that gap here measures. This minus that is $1.34. So the second gap a little bit less in dollars. I'll find my little tool so that we can mark it. And if you're listening in on the radio or your mobile device at tfnn.mobi, remember you can always catch the archive of this show on Channel 10. Now let's take a look at today's gap here so far. We've closed out, or we got to a high on Friday at 35.80. So far this morning, intersession low inside Theravance is 38.45. If we subtract one from the other, that's going to give us a gap of $2.65. So we've certainly got a three-gap play inside Theravance. If this thing starts to show any weakness or it pulls back, where it would actually pull back to would be the first gap out there. And that would actually be a time to take a look at the stepping into this thing. Not suggesting here that it is going to do it, but we do have a three-gap play out here, and it's got some volume behind the move, so somewhat suspect as to whether or not this one will play out. But we're going to go ahead and keep track of it on our screen, and we're going to do it because we got this big old, huge, high-volume low out here from January the 9th. But it's had some very nice moves. That first gap out there had 2 million shares. The second gap had 6.2 million shares. And this morning so far, 4 million shares. So this thing truly is real out here. But in any event, let's go take a look at a couple of other equities here. And let's see, what do we want to take a look at next? Solar City. Let's go take a look at some of these solar stocks out here that are popping. SCTY is the ticker symbol. Let's go see what this is actually doing. So a nice move up with some volume here this morning. So Solar City. So this is an IPO just recently introduced back in the middle of December out here. Let me see, what is Solar City out here, SCTY. And while that loads here, so see if there's anything engaged in design, installation, sale, or lease of solar energy systems. Of course, I guess we could have figured that out. This thing here has a IPO back on December 13th. The low was $9.20. It's now trading at $31.15. So this is a nice little rocket ship out here. Not really very easy to form any, identify any real strong A to B equals CD points out here. But having some decent volume this morning, 917,000 shares. It's got support, which would be back here at the most recent swing point low at around 23.50, 1.4 million shares. That was to the downside already today, 900,000 shares the upside. So not a bad-looking stock chart. That was Solar City. Let's take a look at some of these. Let me see. To the downside, what do we have moving here? You had AutoZone, Joseph A. Banks. We covered that. EV Energy Partners. You know what? Let's go take a look at. Haven't done this here for a while, so let's go do it. Let's take a well. We're going to go take a look at some of the sectors inside the S&P 500. But why don't we first go take a look at King Dollar? Let's take a look at the King, and then we'll take a look at Goldilocks Silver as well. Now, King Dollar here has it's trading inside this 0.786 Gartley sell pattern. And as we take a look at that, you can see that it's still holding inside this area. But this is a weekly chart we're looking at, and we know that we had resistance from this long line of resistance that really started back in August of 2010, bearish engulfing out there. It's been tested several times and is held. And once the U.S. dollar index gets above 83.64, it will go ahead and form a butterfly pattern. What the U.S. dollar index has also done now, effectively, has broken the trend line. That trend line takes you all the way back to June 11, 2010. That's the black diagonal line you see on my screen here. So, everything actually is really in place, quite frankly, for a nice little sell in the middle of May or end of May. But we are going to see it during the 6-month seasonal cycle, folks, so you can hang your hat on it. Let's go out to Raleigh, North Carolina, to Bruce. Bruce, thanks for calling. Thanks for holding. How are you this morning?
Hey, Steve, doing pretty good. I had a question for you on Celgene. By the way, congratulations on your Red Wings.
Thank you very much. Did you stay up and watch any of the games?
No, I didn't.
Yeah, that was it was a good game, for some older guys out there they have, and considering they were close to not even making the playoffs, they have had a strong run, and of course that's what you like to see, coming into the Stanley Cup. You like to see your cylinders start firing, coming into it. Now they're going to be up against, I believe, the Chicago Blackhawks, but I'm pretty sure these Red Wings are just saying, thank goodness they don't have to travel back out to the West Coast. That's tough on some old guys like that.
Yeah, I'm a long-suffering Cleveland fan, so I'm a little excited about the Indians, but I'm keeping my fingers crossed on them.
How are they doing this season?
Indians have been on a pretty good winning streak the last 3 weeks.
Oh, good. Where do they hold spring training? Are they down here in Florida?
They moved a few years ago out to Glendale, Arizona.
Okay.
Or not okay. Glendale, Avondale.
Okay. Is that near Phoenix or Tucson or?
Yeah, it's right outside Phoenix, about 15 miles.
Okay. You ever go to any of the spring training games?
I went back a couple of years ago.
Oh,
it was really good weather out there then, too.
Yeah, it's nice. It's nice during spring training because it's a lot more casual, so it's at least I haven't been to a spring training game for a while, but it certainly used to be like that. So you wanted to take a look at Celgene. Tell me what you're doing and how I can help you, Bruce.
I was thinking of shortening this.
Thinking of shortening it. Okay, well, so tell me what you're looking at here, and as far as what are you? Are you looking at a chart, a time frame, an intuition? Tell me what you're looking at.
Actually, I'm just going off of what I've been listening to, I guess a week ago, and I'm still like a novice at this. But
okay,
that's why I'm just calling you. I'm really just trying to get into all the reading the books and all that.
Okay. Well, will you do me a favor? Would you be kind enough to wait through this next break? We'll come back. We'll take a look at the Celgene, and I'll try to impart some other advice on you as well. And it probably won't be to short this stock, but we'll go take a look at some other areas of weakness. All right, Bruce?
Okay.
All righty. We're going to be back with Bruce from Raleigh, North Carolina. We're going to go take a look at the Celgene. Our call-in number is 877-927-6648. Dow's off 27 points.
Precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. We're going to go back out to Raleigh, North Carolina, to our man, Bruce. We were taking a look at Celgene as a possible area or equity to short. So one of the things, Bruce, that you want to take a look at is, you like to sell weakness. And if we take a look at Celgene out here, if we take a look at the stock chart, do you use any stock charting tools or anything or software?
No.
No, okay. I'm just trying to get a better picture of it. So if we take a look at the stock chart itself, what you're trying to identify maybe is some areas, you want to jump on something that shows weakness if you're looking to the downside. Now you want to make sure the market is also moving in that direction. That's probably 50 to 70% of being able to be on the right side of the transaction. And the only real sign of weakness that we can see here inside Celgene would be the trading session from April 24th. But on that way back, on that pullback with 6.8 million shares, it really didn't break a swing point on the way down. And you want to really see it break a swing point. Now, a swing point, if you take a look at a stock chart, if you're even watching this on my screen here, in the case of Celgene, it would need to break the May 2nd low of 114.05 out there. And it would have to do it with more than 3.3 million shares. And if we were to do that, then you might have an indication here that this thing would be weakening up and could even want to pull back to its original or most recent breakout area back on January 8th, 11 million shares right around a price of 91.52. But there's other equities in the marketplace or even just the indexes themselves that have shown weakness. For example, in the Dow, there's a number of stocks that have shown a weakness. IBM, Procter & Gamble, 3M, McDonald's, a number of big equities there. So if you were going to try to short the market, the Dow itself has given you probably the best overall signals. And therefore, what I would recommend, and we can go take a look at some of those stock charts. I'm going to give you an individual stock chart that you could, if you were using some software tools out here, something more like Holly Frontier, HFC, as an example, something I was looking at over the weekend as a possible short. In this case here, this is already forming an A to B equals CD down. This made a high out here back on March the 5th. And remember, I said we're looking for it to break swing points, and we're looking for it to do it with volume. Well, the swing point on this, coming back to that A point, happened to be on February 26th, and that low was 51.70 and had 7.5 million shares. As Holly Frontier got down to that area, it was with 10 million shares. So it was busting through that area with volume. That's what you like to see to the downside. So you saw sellers in there. Then we see sellers in here again on April the 3rd, another 8 million shares to the downside as it was coming into an area that had a small sign of strength or a gap out there. So right now what this has done, what Holly Frontier has actually done, because it may have had it and it retraced up here on the B to C level, just about a 0.618 retracement. It looks like Holly Frontier, as an individual equity, wants to trade down to about 38.95, and at 38.95-ish range, it comes into a high-volume bar here, which would be from August the 1st. And that high happens to be 37.90. So on an individual stock, Holly Frontier looks like that may be a short. I'm watching it. I'm close to pulling the trigger on this, but I want to see the market itself turn as well. But I'm going to run out of time here, Bruce. But what you want to be looking at is look for one of the ETFs inside the Dow, because we have seen weakness out there. I think the DXD is a 200%. You could short the DIA. I wouldn't do it yet because you got to wait for the bears to show up, and they just haven't shown up just yet. I hope that helps you, Bruce. And by all means, call back tomorrow. We can further this conversation. Happy to help you out however I possibly can. And I hope that the Cleveland Indians play well against every team except for the Detroit Tigers. All right, take care, Bruce. Hey, folks, stay tuned. I believe Basil's not here today, so it'll probably be a replay of the 9 o'clock hour. Have a great Monday. I'll look forward to seeing you soon. Take care, folks.